Get rich quick. That's what we think IPO investing is, right? Apply for an IPO, get your allotment, and make 100% gains on the listing day. Buying a company before everyone else has a chance to invest seems like the best way to unlock the most value and get the greatest return. Then how about we go even further? Let me introduce you to the dark and shady world of pre-IPO investing, the crypto meme coin equivalent of the equity world. The earlier you have access to a piece of a large pie, which is shares of a company, the more money you stand to make. Imagine a company timeline. Let's make a company called Ola Sola Hats. When the company begins, the founder has most of the equity. The company is small, so the value of the company is, let's say, X. Eventually, the founder raises money from VC investors. He loses some of his shares, but he gains a lot of money to build the company. The value of the company at this stage is, let's say, 3x. After some time, the company grows larger and larger, enough to IPO at 10x of its original value. This is when the public or the retail invests. So at each stage, the value of the company is increasing, and the earlier you are in this timeline, the more money you stand to make. So pre-IPO means you invest somewhere here in the timeline. The further you go back in the timeline, the more risk you take, but the reward is greater. So the question arises, in India, how can we buy these unlisted shares? And most importantly, paisa kaise banaye? Let's break down this topic into a few key questions. Number 1, how do we buy and sell these unlisted shares? Number 2, what are the risks involved in these transactions? Number 3, we will explore an online website which has access to these pre-IPO shares like Chennai Super Kings, Boat, NSE and more. And finally, number 4, we will give you our verdict on pre-IPO investing. How can we get these unlisted shares? Well, there are a bunch of ways to do this. 1, if you know the founders or the promoters of a company, you can buy directly from them. Another avenue is ESOP holders, which are basically employees of a company that have shares in the company they work for, which they're willing to sell. Third way is you could go to wealth managers or brokers. These guys usually have access to deals like pre-IPO shares, as they have a large clientele that can buy these shares from them. And finally, there are online websites that give you access to these unlisted companies. We will go through one of these websites in a minute to see what their interface is like and what information is available on these companies. Wait, I just noticed 95% of you are not subscribed. Hit the subscribe button down below. It helps us to keep making such videos. Now, let's talk about something people don't usually talk about. What are the risks involved in buying pre-IPO shares? First is the liquidity. Let's understand this in a simple way. Example, I buy 5 shares, unlisted shares, for our company we previously made, Ola Sola Hats, on one of these websites. Now, since there's no central exchange, no regulatory body like SEBI to look over this process, my shares only sell when someone's willing to buy them from me at a price we both agree on. Since the marketplace of buyers and sellers is small, there may be a chance I get stuck with the stock that no one wants. And the company I hold never IPOs, so I can't dump this on someone else in the future. The second risk is something I just touched upon. We bought this share, a pre-IPO share, hoping it does an IPO. The share price pumps and we get to sell this to retail investors. What if this never happens? What if the company never IPOs? Think about it. What if it gets stuck in our timeline somewhere here, right before the IPO stage? There may be a chance, but never a guarantee that a company IPOs, because many things have to go right for a company for them to be listed on the stock exchange like NSE or BSE. Third, and maybe the most important risk, is information or data. If a company is public, they have to release quarterly updates, they have to be transparent with their financials and their growth prospects. With so much info made public, we have enough data to make an informed decision whether to invest or not. But with private companies, that's not the case. There may be little to no data available on these websites. When you buy a public company on the stock market, there is a large group of retail investors reading through company financials, coming up with a valuation and deciding whether to invest or not. This moves the market. So, pricing of a company is set by us, the retail investors. But in the case of private companies, we are investing in good faith that one day we may see returns. In this case, the price is often set by founders, previous investors, and advisors of the company rather than you. This usually leads us, the retail investors, to overpay for the company due to lack of data and negotiating power. Now enough with the risks. Paisa banana hai ki nahi? Let's look into how to actually buy these shares. Before that, please let us know in the comments what kind of videos do you want to see from us in the future. Videos like how to make a portfolio as a beginner, or a deep dive stock analysis like we did for Zomato or Geo Financials. Now let's get back in the video. I am on a website called unlistedzone.com. I have no affiliation to this website, nor am I sponsored. As soon as we come on this website, you see huge names. NSE, HDFC Securities, Boat, Chennai Super Kings, massive companies which everyone has heard of and can be bought and sold here. Then what's the catch? Let's search for Boat. Let's look through what data is available. As you can see by looking at the 1-year chart, the price moves, but very slowly. Since such less deals are taking place in the market, the price reacts at an equivalent rate. This leads to illiquidity, which we had previously spoken about. If you scroll down, we see that there is a P&L, a balance sheet, and a cash flow statement. But if you compare this to public companies, there is probably 5 times more data available for the public company than for Boat, leading to more informed decisions. Now, let's get into the meat of it. Let's say I want to buy 10 shares. We go and click on the buy button. We are prompted with a notice to leave a message. Okay, please sell me some shares. Now let's click the buy button again. We will figure out the best option for you. This is the issue. It's still a manual process that requires human intervention. Unlike Grow or Zerodha, where you click the button and the shares are in your demat account. Another big concern is if you want to buy a lot size of, let's say, 50 lakhs, you will be prioritized by these websites to get your order filled. So, what's the verdict? Should you invest in pre-IPO shares? Does it make sense to buy these highly risky, unregulated stocks? In our opinion, and again, this is not financial advice, we believe that this should be treated in one's portfolio similar to how crypto is currently being treated. A high alpha play that could generate outsized returns in the future, but that should not be more than 5% of your portfolio. Exposure to risky asset classes is good. It gives your money an opportunity to grow at exponential rates. But remember, to not let greed take the wheel. Thank you for watching Masala Market, and until next time.